Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of SIBO's Options Institute, and it's Monday, August 16th. Now last week, the U.S. equity markets continued their slow grind higher. 10-day realized volatility measures for the S&P 500 index fell below 6%, which is very near post-pandemic lows. Today, the S&P 500 is lower early in the session. Weak Chinese economic data, news about the spread of the Delta variant both overseas and here, as well as headlines about Afghanistan are weighing on the markets. There was also news from the Wall Street Journal that the Federal Reserve may look to taper their monthly asset purchases in the middle of next year. This has been a topic of considerable speculation. The combination of easy monetary and fiscal policy has historically been supportive for equity markets. So both crude oil and copper are lower this morning. Both are considered bellwethers for macro growth. For the past few months, the 65 level has held in crude, in WTI crude, and that may be worth watching with WTI trading just over 66 as I sit here. Shifting back to the equity markets, the August VIX futures and options will expire and cash settle on this Wednesday morning, and standard August equity and index options will expire this Friday. For the past 2 weeks, VIX calls and puts have traded in roughly equivalent volumes, and that's fairly unusual. Typically, VIX option trading skews call heavy. So for example, in the 3 weeks prior, on average, 1.65 VIX calls traded for every one put. Now looking at VIX futures term structure, the August SEP spread closed at 290 wide last week. And as I sit here, it's trading around 260 wide, so it's narrowed by 30 cents on S&P 500 weakness. Now we'll see if the sell-off continues or if markets shake it off like all recent setbacks. That's Volatility 411 for Monday. Thank you very much for tuning in.